I think we've got the best story out there in retail right now. We have Calvin McDonald, who is the CEO of Lulu, which had amazing numbers. Come on, I'm going to ask you point blank. First of all, hi. I'm sorry, that was rude.
No, nice to see you. Nice to see all of you.
Everyone tells me that China's terrible. There's no selling. Everyone tells me there's no such thing as new. It's all old. Everyone says it's the most promotional Christmas in history. You have no promotions. You have newness, and you're doing well in China. What are you doing right that the others are doing wrong?
Well, we have our opportunity, as you know. We're very pleased with our growth across the globe in every market we're in. In mainland China, we've continued to see very strong growth, putting up 39% in Q3. Q2 and year-to-date has been strong momentum. And in that market in particular speaks to the uniqueness of the product. It's differentiated in every market we're in, so a similar narrative. And we're early. And the guests continue to respond well to our store activations, our product, our community events. So we're building the brand with a strong foundation. It's great to see the momentum continue there.
I think that your loyalty program is not a typical loyalty program where I pick up and I see that, oh, there's something on sale for $29. It's not that at all. But let me ask you about something I found quite amazing. You guys have what you measure this. Still an amazing amount of unaided brand awareness. You're telling me that people still don't know, and that there's that much out there that you could still plow ahead with.
In a mature market, which isn't mature for us like the U.S., where our unaided brand awareness is 36%, even lower with men, slightly higher, but the blend is at 36%. So we do see continual opportunity, because once you drive unaided to aided, then you can drive familiarity and consideration, and that's when we get the conversion and the intent to purchase. So we're excited about that continual opportunity for us, and we'll do it on the back of our community, our product, and the way in which we reach guests. But it's why, even in the U.S., we're very confident about the growth story. As you know, in our Power of 3 x2, 24 is our third year to double the business again. We set a goal of 15% CAGR. We're at 19% CAGR at the end with our guidance for this year. And that's a double digit in North America. And we are still focused and see delivering that goal. So we see a lot of opportunity and growth still in the U.S. for us.
What's the limit on driving awareness overall without branching into different price points or audiences, so to speak?
Yeah, that unaided brand awareness we sample with our target guests. So it is focusing on those that we believe are in the price point of a premium athletic wear. And again, it's not aided, it's unaided, which is the more important to drive consideration. But it is a consumer that we believe can be a Lululemon guest, and that's the opportunity we see.
One of the things I find amazing is that you also, not only do you control your inventory very well, but you also control your stock buying very well. You put a lot of money to work when other people had lost faith in you. It was rather remarkable. And I wanted to know how you knew that things were so much better than we all thought.
A couple of things. I do. One, as I shared, the opportunity for us is very specific. It's women's U.S. When you look at the growth levers across every market we're in, 39% China, 24% rest of world, 9% Canada, men's growth in the U.S., we know what the opportunity was, and I believe we've owned it. It was missed opportunity on decisions made around the merchandising mix, and the data is pointing to that. And has all year. High retained guests, high loyal, traffic. It was in conversion, and when we dropped newness, she responded, and we had less than we've historically had. And that's what the team's chasing and addressing. There's no metric that shows any concern to me in terms of the interest in the brand, the health of the brand, the attraction of the brand. We've acquired millions of new guests in the U.S. Our membership's at 24 million. We have a highly retained guest. We have less historical newness. The team's focused on it, and we get back to that historical level in Q1, and that's what we're focused on, and believe the inflection will continue, and excited to keep delivering for our guests.
Newness is a cliche in your business. I shouldn't say your business, in the other people who are in your business. And yet when I go to their stores, and I like to go to stores, there's really nothing new. I don't know what it is. Newness seems to be in your DNA. How do you keep coming up with new things?
Well, we build I mean, one of the other strengths of the brand is that it's not a fashionable led. It is fashionable, but we're really rooted in high performance, high style. Right. That's why we're able to manage our markdowns. It's why we're able to. We have a solid core driven business. And when we think of newness, it's building on that core. So at the base is core colors. Then it's new color, print, pattern on core silhouettes and styles. That's new. We fell short and had less of that. Then there's true newness, innovation through franchise and hero items that we bring, and building through life cycle management the next franchises. So we always do a mix that allows us to get that blend right.
Calvin, you mentioned China. I'm curious, we talk a lot about the health of the Chinese consumer. I'm curious as to how you see it. And then I'd also love to get your sense in terms of the incoming administration, the impact perhaps of tariffs and or tit for tat that could take place as a result.
In terms of the consumer, we're seeing, we continue to monitor the macro, obviously, and we're not seeing any impact, obviously, as our Q3 results demonstrate. Yeah. And heading into the fourth quarter, we're pleased with the start across in all markets. We have a blend across Tier 1, Tier 2, Tier 3 cities. We're more concentrated in Tier 1, Tier 2. And I think it's a combination of the uniqueness, the differentiation, and early in our growth there, while we're able to continue to grow, acquire guests, and grow that revenue per share. We're monitoring but have not seen an impact. And relative to the tariff conversation, we do no importing from Canada or Mexico. Mexico, it's less than 0.5% of our business, 3% of our finished goods from mainland China. So our current exposure would be minimal unless it's a broader all-import tariff, and then we would, as others, have to look both internally and pricing as an opportunity to offset. But as of right now, we have minimal exposure if it's a direct tariff on mainland China.
Do you see yourself being as experimental or exploratory as you were with the Mirror deal?
We are a test and learn business, and it's part of our culture, part of how we want to continue to grow the business. I joined back in 2018. The business was less than $3 billion. Goal was to double it. We did that a year and a half early. New plan is to double it again to 12 and a half. We're on track to deliver that early. And we are a growth business. And growth is a combination of new markets, expansion in the markets, as well as new categories and new opportunities. So we're always going to be looking for ways to bring our brand to the consumer, to our guests in exciting new ways. But we have a lot of growth within what we control, our categories and the markets we're in. But we are a test and learn business, and we dream big, and we're comfortable to go and pursue and see what we can create for.
And then last thing, you did talk about how Thanksgiving weekend's very strong. I mean, this may be a better holiday season than we think.
We're off to a good start. And as you alluded to, when most of the mall is discount across total store, we launched newness. We're really pleased with our regular price sales. We saw in-line expectation on markdowns, but we're off to a good start. And there's 5 less days, so I think we're taking a rational approach to the uncertainty. There's a lot of the quarter ahead, and those are big days, but we're off to a good start, and the consumer's definitely signaling an engagement in spending, and in particular with our brand.